Hello everyone, how's life? I hope nobody has had a heart attack so far. Like I saw the market and it took a dive. And yeah, if you guys are feeling sad about your portfolio, just sit there, look at your portfolio, give yourself a smile, and just say, life's good, and move on. That's all I can say. And actually, I have not been in the investing scene for past 1 week or so until Chikeng, my fellow YouTuber, he called me up and he was like, "Hey, have you heard what happened?" And I'm like, "What the fuck happened? Don't scare me, man." And then yeah, that's where I heard about the education shit that happened. Like China wants to take the or whatever shit. Let's talk about it later. So yeah, that is one thing I'm gonna cover in this video. And then also I noticed that there has been a disparity. So all this while we are saying that Chinese stocks are tanking and all those things, right? But if you see the Chinese stocks that are listed in mainland China, the story is not the same. However, all the Chinese stocks listed outside, the tech stocks generally, are taking a huge dive. And obviously, the bigger arcing story is that there is a lot of regulatory shit going around, anti-monopoly, whatever shit, right? The clampdowns on the tech stocks of China. So yeah, that is the overall story. But let's dig deeper to this information. Like it cannot be such a disconnect, right? So in this video, we're just gonna talk about these two things. Let's hit it up. Alright, so let's firstly just let the genie out of the bottle. So there was a news by Bloomberg, I think on Friday or so, that China is going to make all its tuition industry non-profit, and that is really a blow for it's a disaster for all the investors that have invested into these companies. And yeah, the stocks are already going down. Actually, even before this, like since the February highs until this news came out, the edutech stocks were already down over 70%. All of the ones that are out there, TAL is one, and then there's New Orient education stock. So yeah, 70% down even prior to this news. And when the news came out, it took another dive, and in total we are seeing peak to bottom now, a drop of 93%. That is absolute disaster for all the investors who have invested in these stocks. And I'm very sure, when I was in so I was a part of a group in my school of all the finance dude who are actually interning in major financial institutes like JP Morgan, all the banks, and actually working in the equity analyst department. And that's where I actually learned a lot of my investing and how to value stocks and all those things. So over there, I had number of people, whoever was bull on China, they were focused. They at least were talking about the education theme, because that was a big thing over. So it was a broader theme. I was just not somehow I didn't even bother to look into it too much, but I heard about it a lot. So these people who are obviously in this industry, they are talking about it, so it should be a big thing. And it crashing like this is just absolute disaster. So however, let me just be clear that this news was just hearsay. So I don't know what are the sources of Bloomberg. I didn't go and read the entire report. But anyways, it's not official news, so we cannot rely on that. But if Bloomberg is reporting it, they're quite a reputable brand or a company or a reporting agency. So yeah, we have to believe them, and they have been right about things. So if they're reporting it, their sources might have been good. So I believe this might happen. I would say I'm leaning towards that side. But what has already happened is over the weekend they have banned weekend and holiday tutoring, and that is another blow to the companies in a way. And that is also driving the stock price down, right? This is something that is already official, and the companies have already made the statement that it will adversely affect their performance, their earnings and stuff. So yeah, why China is doing it? So let's talk about the weekend ban and the holiday ban, right? First of all, because that's the easy one. So obviously they are trying to reduce the stress level for students. Like in China, it's competitive as shit. So Giving you an example, when I was staying in a dorm for my university, right? I had a roommate who was grew up in China. He was here on an exchange. So he told me that usually students will study 2 to 3 years ahead of their uh, class so that they are able to get a placement in the university. So it's that tough over there, and that's completely a normal thing. So it's just like blew off my mind. And that guy who was studying computer engineering, right, he could still solve my heat transfer questions, and that is something that he would have never come across because of, like, it's not a part of his syllabus. So it really, and I'm very sure he's not an outlier in this or a prodigy in this. All this, like, these Chinese people, I mean, they are very, very focused and they study a lot. It's kind of like, if you take it right, it's freaking stressful. So I believe by China, like the government implementing these things, right, they want to reduce some of the stress. It's something like, it might be less productive and less like, reduce the productivity in a shorter term, but it will make humans a bit more happier. And in a longer term, it's proven that if you're happy, you're gonna be more productive. It's something like working. If you're a manager and you're working, like, you have people under you, right, you have to make them feel happy in the workplace. And it's if you just let them be overloaded with work and overworked, it's gonna be good for a short term. Like, your productivity will increase, your labor cost would be down, and you're gonna increase the profits for your company. But in the longer term, it's gonna destroy the company. Like, if the employees are not happy, the end products are not going to be happy, and the productivity will definitely drop, and that is not going to be good for the long term, right? That is how we have evolved. So prior to, like, I think a chocolate company that came up with the weekend offs for its employees, right? Before that, everybody used to work 7 days a week. So by implementing this, it improved the situation and increased the productivity. Similar thing we see with Google. It's a step forward. So they offer so many amenities at their place, and they also have they have 5 day work week, and out of that 5 days, they have one day where it's just an innovation day or some, I don't know what they call it, but the employees are able to come up with new ideas and stuff at their own time. They don't have some work to do on that particular day. So that just improves the motivation in a way, or whatever the psychological effect that has. But in the end, that's how humans become more productive. So yeah, that is the same thing I think they are aiming for as well. They want to make their population happy and not just stressed about shit or throughout. And you see so many suicides and everything. In Asia, mental health is a freaking big issue. In Singapore, Hong Kong, or wherever developed country or is facing this issue. So China is seeing this, and they are trying to, like, pull it down in a way. Now, I don't think how it's gonna help. Like, imagine, like, students are sneaking out or illegally studying on weekends. So that's gonna be kind of funny, right? But I don't know how they're gonna, like, monitor or how are they gonna implement this thing. But whatever the case might be, I mean, like, for our tuition centers, they could just give more homework, and then students would be still freaking grinding their ass over the weekend doing the homework, even though the centers itself are not open. So I'm not very sure how are they gonna actually implement these things, but that is where they're going. And I don't think it's gonna affect the companies very much. Like, you can't expect for a university to earn a lot more if they are, like, having trimesters instead of 2 semesters, right? Or you can't I mean, the amount of education is still gonna be there. I don't know, like, it could be like they are charging students on an hourly basis, but whatever the case might be, I think that is not gonna be a long term. It's not gonna affect the tutoring industry in the long term, like the revenue or whatever. In 1 year's time, yeah, sure, but for a long term, I think everything is just gonna adjust, right? It's gonna optimize, and you'll get back to the normal track. So that is that. It's not a big issue for me, like the holiday and the weekend shit. But if China decides to make these companies non-profit, that is gonna be a big blow. And it's not okay. So the reason for making it non-profit is they are trying to lower the cost of raising up kids. China is, everybody knows, is facing a crisis where there's not enough amount of youth is not there, and their population is aging. thanks to their one child policy, right? But since then, like now China is encouraging couples to have more babies, but they don't want to have more babies because the cost of raising a kid is so much higher. Especially one of the biggest costs is education, right? So yeah, they are trying to reduce that cost in order to encourage like families to have more kids and stuff. So that is their goal. And overall arcing scenario, right? I feel that China is really learning from the rest of the countries, the developed countries, and seeing what are the issues that these countries are facing after being developed, and they're trying to tackle these issues. So the first thing that would be there is like this issue, right? Where the first issue they tackle is the deleveraging of the property industry or the real estate industry. So everybody knows about what happened during '07 crisis in US. There were so many properties and everybody was so leveraged, and it was just like they were getting more and more and more, and it blew up. So once that blew up, the economy collapsed, right? China right now is facing similar things. So everybody knows they have this real estate bubble over there. They have been dealing it, but it's there, right? And it could burst. And the companies, the development companies, they are overly leveraged. So what China is doing right now is slowly deleveraging these things. So they're letting out the air from the balloon, and they are letting some of the companies fail. They are stopping any more leverage going into these companies. They have this like 3 red line or something like that policy that they came out with. And yeah, so they are letting a bit of deleveraging happen in this industry so that it just doesn't burst out. So that is the first thing they did. The second thing is this education thing, right? If you see in US, there's so much hoo-ha around education loan, tuition loans and stuff. So it's another bubble that is happening in US. Students study, but they have so much debt on their head after they graduate that until their 30s or mid 30s they are still in debt of their studies. So that is another issue that I believe by making these companies non-profit, China is trying to solve. The third thing, I just give you a brief, I believe is healthcare that might face these issues. So US, another example is healthcare is freaking expensive as compared to any other country. Right now, the cost of healthcare is way lower in China as compared to US. Obviously, US has more facilities and stuff and better healthcare system and all those things, right? But nevertheless, the cost of healthcare in US is crazy high. And I think this is another issue that China might try to solve in the future. So just keep an eye to that. It's just my opinion. But getting back to the topic, right? Whatever China, like the government is trying to do is for betterment of their public, right, of the citizens, and that is their main objective, like, or main goal or main obligation. So any government exists is to help out or make its country, its population, its citizens have a better life and improve and prosper. So that is what China is trying to do. But where I believe they fucked up is they should actually take these companies private first. Take them private, do whatever shit you want to do. Like, you can make them non-profit on whatever you want to do, instead of like just announcing that you're going to make it non-profit, and then all the investors out there who have invested into these companies, they just lose out all their money. That is a very shitty thing to do. And if that happened, and actually that has already happened, if this kind of information leaks out from the government to Bloomberg, that is already a big mistake on their side, right? Even if they don't have, they won't do it. But if the news comes out, like if it's a military secret, right? And if they can contain a military secret, how can this kind of news come out? And everybody knows that with this kind of news, the market is gonna move like crazy. It's gonna move the market. So how can they let this kind of information leak out? And with that happen as well, they should come up and talk about it, right? Like, inform the public of the real thing. So that didn't happen as well. And nevertheless, even if now they want to take it private, I think it's good for them. Like, they can take it private at a cheaper valuation. They don't have to pay much for the companies, and make them go private and then make them non-profit. That would be good, but it's not ethical in a way. But we never associated Chinese government being ethical, right? And that is like one of the risks that we all had, but now it's more up on our face. Like, is Chinese government showing their true face? And yeah, so I think that's what is affecting the sentiments of everybody now investing into Chinese stocks. And we are seeing the repercussions in all the other Chinese stocks as well, other than the education tech stocks itself. So yeah, this is the thing, right? And overall, I mean, all the regulations, talking about all the regulations that China has been coming up, we can just like bundle it in three different groups. So the first one is the antitrust monopolistic behavior regulations, right? Then the second one is fintech related regulations, and then we have the data security type of regulation. And if you see, all these three types of regulations, right, is not something that is new. Like, all the developed countries have these kind of regulations, and China has just been very fierce about it, and they are implementing these stuff in within this past 1 or 2 years. So yeah, we are seeing back to back, like, the entire prospects of Chinese stocks have been bashed by negative news, one over the other, since, like, I think November last year, when the Alibaba shit happened, like the Ant Financial and Jack Ma stuff happened. Since then, there have been back to back bad news and bad news and bad news and bad news and bad news. So it is really, really affecting the sentiment of the people, especially when we know that, none of us as foreign investors, none of us has no idea how the company is operating, or what is the user experience, because we have never even tried their products and the services. We solely rely, and what our option is, we can only rely on the news channels to, like, objectify our investments, and to see where the investments are going. That is the only way we have. Like, if you have a company you're investing in, and it is operating in your own country, and you can use the products, you are seeing it on a daily basis, or you just know about them roughly, other than the news channels, your objective, your perspective of the company would be different. And same goes for these Chinese tech stocks as well. None of us are using it, but the ones that are using it could make a better judgment, and that is exactly what I wanted to see. So I went on to check out the Asia market, and these Asia stocks, right, the onshore stocks, it is predominantly owned by the Chinese investors, very less of the overseas investors, just because we don't have the access to, like, reading all the Chinese reports and stuff like that. So on the other side, we have the overseas Chinese internet stocks, like, all the tech stocks, Alibaba, JD, Meituan, all these things that are listed overseas. They are not listed on the Shanghai stock market or the mainland stock exchanges. So the access of mainland Chinese investors is very less for these companies. They can only buy it through, like, indexes and stuff, and that too only started recently. So if you look at the onshore market, right, with the blue line, you'll see that it's very, very stable. Like, it's with a upward trend, or slightly, flattening out right now. However, the overseas investing market, right, the tech stocks, where all the foreign investors are invested, it is so volatile. And if you see, it is all driven by news. So at maybe during January or so, we started to know that Chinese economy is rebounding right now. They control the virus pretty quickly. They had started, their vaccination rates were high, and all those things. And that's where the economic data that was China was pumping out was really, really good as well. There was the first big economy that actually rebounded after the pandemic. So that's where we saw all the the stock market going up. The Chinese tech stocks went up, and then during February, that's where all the earnings reports started coming out as well, and that gave it a bump. Like, Chinese stock, the companies were performing fairly well even after the pandemic. So that's where it got a huge jump up as well. And then we saw the peak during February, and then there was, like, all the negative news around inflation, and that shit started happening. And then also, like, the regulations keep coming up, and then we saw a huge decline as all the negative news started piling up. And until now, it is way below what the Chinese on-share stocks are doing. And it is quite explainable. Like, in a way, the clampdowns are mostly on all these tech stocks which are listed overseas, and there's a big reason why. Like, it's these tech stocks that are listed overseas, and Chinese government is worried about with the data and everything. And uh, there was recently a get together, or what, a round table that was hosted by Goldman Sachs, and they brought, I think, a number of various big CIOs, chief investment officers of various funds, and uh, they commonly came up with the conclusion that the most undervalued or equity undervalued asset class that they think is the Chinese stocks. And also they are knowingly underweight on them in their funds. So that is something that is known, and we all know fundamentally Chinese stocks are very strong as compared to US stocks, right? Giving you an example, in the JD's recent 18/6 sale, right? They sold more than 4 times of what Amazon did in their Amazon Prime Day, which was on like similar time scale. They sold 4 times more goods. And even then, when the news came out, JD's stock was down, whereas Amazon obviously was up. And so yeah, there is fundamentally the Chinese stocks are very good, but obviously they are trading on the sentiments right now, and that is very clear to all of us. So I just wanted to establish that. So yet again, I think the reason why these fund managers or CIOs are not scooping up these shares is because of the regulations by US, where they are saying that they will ban the companies, or they will delist the companies from US, because if holding foreign companies accountable act, where they have to provide them with the financials, whereas the companies have to provide the financials for editing by the US authorities. And since then, China is also taking a very serious stance on this, on letting any of the data flow to the US from its companies. And that's where all the DD shit happened. They much rather have these companies list on Hong Kong than list on US exchange. And yeah, I think that is a serious threat that these fund managers also see, and that is the reason they are not heavily weighted on these Chinese stocks. However, I'm very sure fundamentally the stocks are strong. And talking about the mainland investors, right? I also pulled up this slide from Crane Shares' recent Q2 outlook. So yeah, they are talking about how mainland Chinese investors are actually piling in their money into these Chinese internet stocks, and the internet stocks, which are the the companies that we as foreign investors are investing into: Alibaba, JD, Meituan, and all these companies, right? So take note that until now, Chinese investors couldn't invest into these companies because these are not listed in the local exchanges, and Chinese investors can't invest into foreign places. Like, it's not so easy, right? So yeah, but recently the Chinese government actually approved some of the ETFs that were tracking Hang Seng's tech index, which covers all these companies, Alibaba and all those things. And that gave Chinese investors an opportunity to actually invest into these companies, their own home companies. So at the start of this year, like, one of these ETFs shares outstanding, right? This is the ticker symbol. You can go and Google it. So they had like 2,500 shares outstanding in millions, right? So yeah, since then, in 7 months and in this year, the number of outstanding shares had actually crossed 12,000 mark. And what is that? 4-5x, and that is a huge increase, right? And the flow of money. And the story is similar with the asset under management as well. So it went from I guess 800 to now 3,500, and that's taking in consideration that year to date the index is actually down about 15 to 20%. So even then, the asset under management is growing. So we know that these mainland Chinese investors are actually pumping their money into these companies, whereas the foreign investors are actually moving out. So what we I see from this is that mainland Chinese investors who actually are experiencing these companies, who actually are seeing the fundamentals and all the other good things, are actually pumping in their money. Whereas we as foreign investors who only rely on the news that has been pumping out, and sometimes it is very political, like there are political agendas where with all the news coming out. So that is what is driving our investments in the end, all the news. And it is very sentiment based. Like, you know, if you talk about the numbers, Chinese companies are growing at a rate way faster than US companies. But if you look at the peg ratios, Chinese companies are lower in terms of peg ratios than US companies. It is not very, it doesn't make sense, right? So, yeah. To me, yeah, in mainland Chinese investors, they are actually, they know the companies, they experience it on the daily basis, they know the goods, the services, and all those things. And if they are deciding to put in their money, I think it is a good investors. But obviously there is a lot of risk that we have covered in this video already, and I think it's a very, very long video. So I just want to end it right there. If you guys have any comments or any questions as well, just put them down in the comments below. I will try to respond to all of them. Actually, I do respond to all of them, so yeah, just feel free to like put them down there. And obviously I would love to have some feedback on my content as well. So yeah, that being said, until the next episode, ciao.